Looking for the best opportunities in Perth property? Get the local area expertise you need from Momentum Wealth, WA's trusted property investment consultants. Market insights, advice and representation from award-winning buyers agents and REIWA Hall of Fame inductees. Visit Momentum Wealth's website at momentumwealth.com.au to organise your obligation-free consultation today.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hi, good everyone. How you going? Thanks for joining us on the podcast today as we navigate property right across this great nation. And everyone's at tenterhooks right now, wondering what will happen as we record this with the US election. I think there's going to be a bit of argy-bargy for a little while, but I think we can proceed on the basis that there will be a transition of power. We have a new president in the USA, and all the commentary that I'm wrapped up in right now and what people are asking me about is that what does a transition of power in the US mean for Australia and Australian property markets? And I've been chatting at length around that. It's not for the thrust of this chat today, but there is and will be some impact as a result of the US elections, and that is going to be connected in with attitudes towards trade, geopolitical, argy-bargy. You're going to see a lot of stuff happening over the period of time, and we'll keep and watch this and try and translate that into what's happening in property markets. But property markets is discussion of property markets is Australia's national pastime. Every dinner party I go to, albeit not many recently because of COVID environment, everyone has an opinion about it. And for some reason, people think I know what I'm talking about, and I don't. I'll tell you that fact. But I'm pretty good at finding people that do know. And if I ever have an opinion, it's normally someone else's. I've spoken to someone's opinion I know and trust is backed on truth, is backed on the numbers, and also backed on the reality of what's happening right now. And there's been a lot of discussion recently around what's going on in Perth. We've touched on it on the Smart Property Investment Show. I must admit we've been a bit light on Perth the last couple of years. One of the reasons why, because there hasn't been much happening there, and most property investors haven't been looking towards the Perth market. Most of it's been concentrated on the East Coast, but times they are changing. Perth is moving. It's now in some ways the darling of many property investors, and a lot of them want to keep it quiet. It's like a surf spot. You find something really good, you don't want anyone else on it until you've had your fill. So we're going to chat all things Perth today. Help me out with this, Damian Collins, Managing Director, Momentum Wealth. He's also the President of REIWA. Damian, how you going?
I'm very good, Phil, and good to be here with you again.
Are you originally from Perth, Damian, or you're an import?
I'm a Eastern Stater, as they call people from over east. No, I'm ex-Victorian, moved here 20 years ago for love at the time. So I'm still here. So love it over here. Love the lifestyle, the weather, the bike riding, and haven't loved the property market for a while, Phil, but I'm loving it again now.
Well, we'll get stuck into that. And for our listeners, Damian's a good friend of Smart Property Investment. I've known Damian for years. We used to sit once upon a time, I believe, on the board of PIPA together.
That's right. Yeah, that was probably 8, 9, maybe 7 or 8 years ago. Very much enjoyed my time with PIPA and still a big supporter of that organisation. But REIWA has taken over my life as well as my own business, unlike yours, Phil. But no, we had a good time on that board, and it was a good group of people.
That was good fun. Now, before we get into pulling apart the Perth property market and how it's going, tell me a little bit about REIWA, or for those of our listeners that aren't familiar with us. So this is the Real Estate Institute of WA. Is that correct?
It is, yes. So around the country, we have a national body, Real Estate Institute of Australia, and that's funded by all the state bodies, but every state and territory in WA has an REI. So there's REI, Real Estate Institute, and then WA, and then there's REIV, Victoria, REI, NSW. So it's an organisation that is really the voice of not just real estate agents, but also to some degree a voice of consumers as well in the real estate market. We spend a lot of our time certainly lobbying government and making sure they're not going to impose silly legislation which might affect property investors and tenants. And certainly through COVID, all the states put in place to varying degrees some interesting legislation, which mostly will be gone by early next year. But certainly there's always the Residential Tenancies Act, Commercial Tenancies Act, there's always something. So it's really important as industry bodies that we're out there making sure for all of us in real estate, we want a transaction to be as easy and seamless and as least costly as possible. So that's the objective of, no doubt, all the REIs across the country.
Yeah, and as president, the key sort of main role for you, is that to be a sort of commentator on the WA market, being that supportive mechanism or that interface between industry and consumers. Who's a responsible minister over there that you've got to sit down with and have a chat with?
Yeah, our Minister is Attorney General John Quigley, so he's the Attorney General and also the Minister for Commerce, which is our regulatory body. So I definitely do meet with him and discuss issues. So the role is, as President, it's a board. They run REIWA turns over about 20 million a year, so it's a decent sized organisation. It's you run as chairman of the board, you run the board meetings, but also very much the media liaison in WA. That's always been the president, who's the media spokesperson. So that always chews up a few hours a week, and also the political side, certainly advocating and meeting with the various government agencies and also the ministers. So keeps me busy about a quarter of the week, Phil, and in the other 3 quarters of the week, I try and find time to do my day job and keep Momentum Wealth and our funds management group going.
No, very cool. And, I can see why they probably put you front and centre to be a commentator around the Perth market for the media. I think you're well tuned for the job. Well, how would you explain the relationship you got right now with the state government? You guys are getting on well? Is it sort of pistols at 10 paces, or is it sort of, you've got common goals, common objectives?
Oh, it's pretty good, Phil. Obviously, I've seen across some other states, certainly in the southeast corner of the country, a bit of a dispute with their various state governments over the years. And look, we certainly don't hold back where we need to. We were quite vocal and in our dismay at the extension of the COVID legislation. We've been in an environment here in WA where we haven't had a community transmission for 6 months. Our original COVID protections for commercial and residential were meant to expire in September, but they kicked it down the road for 6 months. What a surprise. The election is in 5 months and 2 weeks, so it expires 2 weeks after the election. What a surprise, eh? So we were very vocal about that. They've told us that they're not going to extend any further. So by and large, we do get on pretty well, but we certainly are a vocal critic where we need to be.
Now, set the scene for me, Damian. I've sort of been in and out of WA for the last 4 or 5 years, doing what I'm doing in property. And the market performance at best has been lackluster. I think at worst it's been dire. Before we get into sort of COVID and what's happened over this period of time and where the state is right now, particularly the Perth market, can you give me a quick, brief history of the last 10 years of Perth property?
Yeah, absolutely. So we came out of the GFC in 08-09 pretty well. For your listeners, it's important to know, look, WA is very much a mining-based state. So even though it's only 10% of our workforce, when you add in all the accountants, the lawyers, other service industries, it's really important part of our economy, gives the government royalties. So we tend to go, and our property market tends to go the way of the commodity cycle. Now, the good thing is at least we aren't a one-trick pony, like Houston in the US, where it's all oil and gas. We've got oil, gas, we've got iron ore, gold, nickel, a whole raft of things. So we came out of the GFC, commodities were still going okay, pretty well. We didn't really take much of a hit. And then the mining construction boom kicked off in about 2011. And that was when we really saw a significant increase in demand for property. Population was growing in 2011, 12, 13 at about 3% per annum. On average, it was going gangbusters, and everything was booming. House prices were going up. Construction industry was going really strong. And mining, they spent somewhere in the order of $100+ billion on construction of various projects. It was just absolutely phenomenal. So that was going well. And as I said, the house prices went up as relative to demand. But as always happens with property, is the time it takes to adjust to demand and supply signals it takes a while for people to adjust and respond, but also the time to deliver takes a long period as well. So just in 2015, as the construction boom was ending and people started leaving the state because they didn't have any more work, we built the most number of houses. We started building 30,000+ houses, and including apartments, but predominantly we're still a house-based construction sector, right at the worst possible time. So we had this massive overbuild. Our population growth dropped from 3% to 0.7%, and that was all natural growth. So everyone who was coming internationally, the equivalent person was leaving the state to go over east. And I always say to people, natural growth is great for property prices and great for property in the long run, because those babies will eventually buy their own house and create their own household formation. But in the short run, natural growth doesn't do much because babies don't buy houses. It might mean a switch of a house, but it's not a new household formation. And secondly, a death, which is part of a natural growth, could actually put more supply on the market, could be deceased estates. So we had an overbuilt market, oversupplied. 2016, 17 were, as you mentioned, 18, even 18, coming into early 19 were lackluster at best, and in some areas very dire, particularly in the mortgage belt suburbs, down 20+% over that period of time. It was the worst downturn we've ever seen in West Australian property. We went back in history, and as far as REIWA's history could go, the previous worst downturn was 22 months. This ended up being 63 months. So it's been very painful for everybody who's been an investor. Been in the real estate industry, it's been challenging. But over the last year and a bit, the things have started to turn. The mining sector has really picked up. Iron ore prices are amazing levels. We got our GST back, and there was a big debate about that because we were only getting 30 cents of our GST, and now we're getting a floor of 70. So even if iron ore is strong and we get more royalties, we get to keep our 70% of our GST. And gold is very strong, and nickels are very strong. So all of a sudden, we've gone from an environment where people are leaving the state to it started to turn around. In fact, in late 2019, early 2020, we effectively had no one leaving the state and started to get. We had international migration and not much domestic net exporting out of people out of WA. And then the population growth got to 1.5% in the year to March 2020. So pretty much our oversupply ended in late 2019, maybe in the higher end of the market, mid-19, and then we came into 2020 looking pretty confident. And of course, we can talk a long time about COVID and what happened. But that's the short history of the Perth property market.
Yeah, a good friend COVID, and we'll get into that in a moment. Do you think how much scar tissue do property pundits in Perth, that sounds pretty good, have towards that last sort of decade, or since the GFC? What are the key lessons, or do you think that those key lessons will be heralded into this next moment? Are you going to make the same mistakes again? And is the government currently in place going to make those mistakes, or do you think they're conscious of them?
Oh, look, I think the government, the best thing they can probably do is just stand aside and let the market, take its own course and not interfere. Allow construction to happen. That'll meet demand. But look, I think investors and people are gun shy. Absolutely. I think the two big lessons that has come out of the last decade is mean reversion. So if you've got longer memories, you'll remember 03 to 07, Perth went ballistic and caught up to Sydney house prices, and it should never have. Perth should be more attuned to Brisbane or slightly ahead of Brisbane, but we got up at nearly Sydney prices. And of course, while most of us thought, well, we need to have a flat period for a while to catch up, we certainly didn't expect 13 years of a flat period. But so any city that has a massive boom, and you look at what happened in Karratha and Port Hedland, it's just as regional towns, there's always a price to pay at the end, whether it's many, many years of flat or even declines. We saw that in Sydney, 03 to about 11, we saw no growth at all. So if you're getting into a city that's already had a really strong run up, I'd be very wary of that, because there's always that mean reversion. Prices tend to have a long flat or decline period after a really significant run up. And I think the other thing too is a lot of people have hopefully learnt the lessons about supply and demand within areas. The outer suburbs got absolutely smashed. The house and land packages with a sea of land available, not much demand. You couldn't give them away 12, 18 months ago in the last few years. So you hope the lessons have been learned, but you're totally spot on, Phil. We've got a nearly 40-year low vacancy rate, and investor finance demand is about a third of what it was this time. Last time we had this low level of, or near this low level, haven't had this level of vacancy 13 years ago. So yeah, people certainly got some scars and wounds, and I think they're a bit until they see consistent growth. I think for 3 to 6 months in the paper, in the stats that are coming out, we're only just starting to see it now. I think we'll see a lot of investors sit on the sidelines, but that's good for those who are getting in, because you're missing that inevitable competition that will come into 2021.
Just goes to show for our listeners just how important timing your market is. You're never going to pick the bottom, you're never going to pick the top, but if you're investing in a market that's had a boom, and then you got to sit on your money for what could have been a decade or 15 years to try and at least extract it back out, get the valuation you are. Imagine the missed opportunities around it, and that's where a good property strategist can exist. So you've painted the picture to late 2019. We entered 2020, Damian. Things are starting to look a bit better, and it was sort of the middle of 2019, probably August, September, when I started having discussions with people like yourself and other people who were interested in property markets, going, there's something going on over here now. And I knew people were traveling over there. I knew a lot of other buyers agents who were, sniffing around Perth from the East Coast, having a look at what's happening and looking at both and analysing the data and the economic macro and micro indicators, which would indicate change, but then also what is happening there in the state and ground truth at that point in time, saying don't need the rust, but now's probably the time to start buying. So we entered 2020, things looking good for Perth. Late February, March, COVID hits, throws the world on its head. Does it put a dampener on Perth property? What's happened over the last 6-7 months, mate?
It did, Phil, for about 6 weeks. We, like everywhere, got into a pretty quick shutdown, lockdown. I sent all my staff went and worked from home, and home opens could only be done by private inspection, so at least we could still do that. And but look, as you said, we came into it with quite a significant reduction in supply. We've at the peak of the oversupply, we had between the stock for sale and stock for lease, we had 30,000 properties. Right now, we've got about 12,500. So between the sale and for rent. So we've gone down massively, almost 65, 70% decline in available stock. And coming into 2020, we thought, gee, this is going to be a decent year. The growth is finally going to come. COVID hit, then it was literally 6 weeks. Transactions fell off a cliff. We didn't have much transactions. People were nervous. But then we sort of got rid of COVID very quickly out of our community. The government started relaxing restrictions coming into middle May, late May. By June, the market was, home opens were happening again. People also were getting building grants, so there's a bit of optimism. And so all that COVID did was really delay the demand that's been there. Everyone has been in Perth. Everyone wants to buy at the bottom. Everyone's been sitting, waiting. And, they all want to pick that exact day and month. And I think once we came out of COVID with the mining sector so strong, people said, yep, it's on. We're finally. And that's where we're at the moment. Over the transactions have gone up to the best in 5 years. Certainly our buyers agents are competing on a lot of properties at the moment. We're obviously trying to get stuff off market where we can and get in early. It's not a market to... one of my friends, I got on the tools again as a buyer's agent, which I hadn't done for a while. A friend wanted me to help him out, and it was a hot property in Claremont. This is the upper end of the market where it's particularly strong. First home open, 7 offers, and sadly I missed out. He was 50k off the market. It was about just under 2 million sales. So it is quite buoyant, particularly at the top end. But interestingly, it's still owner-occupied driven. The investor market, as I just said a bit earlier, I think it's a psychology of recency. People are that scarred because normally in this sort of market, when we would have a vacancy rate below 1%, which is only the third time in 40 years in Perth, and it's plummeting, it's going down even more. We're going to hit the 40-year low in the next 3 months, which was in 2007 at 0.8. I went back and looked through all the ABS finance statistics. The last time we were 1.5 or below. We've never been 0.8% in 2007 and 1.3% in 2013. Investor finance for WA was about $1 billion a month. Right now we're sitting at 340 million last month. It was recorded and it was September, and the previous months were 280, 290, like still at very, very low levels. And for every investor who's coming in, there's still one selling out at the other end. So our rental rate, was on the front page of the West a few weeks ago. Rental, and it was some comments from myself in my REIWA role that rentals spiked 20% when the moratorium ends, and categorically they will, because they already are. Where a property comes up for lease now, if it's a house, it will get 40, 50 people wanting to come through, 5 applications, and it'll be up 20% easily. Apartments up a little bit less, but rents are definitely spiking big time.
That's madness, and we'll get into that in a moment. We'll pick up the chat when we come back from a break about how to assess the right opportunities in Perth right now. Back in a moment.
Whether you're an avid property investor or about to buy your first property, why do it alone when you could partner with Australia's best buyer's agent? Director of Pure Property Investment, Property Investment Professionals of Australia board member and REB Buyer's Agent of the Year, Paul Glossop, can take your portfolio to the next level. Get in touch today to discuss your investment goals. Get one-on-one insight from Paul Glossop, and for the first 100 people, this service is completely free. Head to purepropertyinvestment.com today to schedule your consult with Paul Glossop directly.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with Damian Collins, Managing Director of Momentum Wealth, also President of REIWA, and I think probably the biggest advocate for Perth property at the moment. You're flying the flag. They're going to give you the key to the city at some point. I reckon, I've just worked this out, Damian, as I've been having a chat with you. I reckon you're behind the WA border closure to try and keep all those pesky East Coast property buyer agents out of your state, so you get a free run pass at this, mate. Is that what's happening?
I know there's been a few sniffing around over here. So, no, actually, I want to open the borders, Phil, and luckily they now have, because I want more people coming into the state to put more demand for property. So, look, I've heard our borders come down on November the 14th. So there's going to be quite a significant number of people, except to Victorians and New South Welshmen. Unfortunately, you've got to go into 14 days isolation, but at least it's self-isolation, not necessarily hotel. But all the other states and territories can come. They have to fill in, get a G2G pass, good to go, but that's pretty easy. All you have to say is I don't have COVID and I'm not sick. I've heard through the grapevine there is many thousands of people wanting to come over, and I suspect they're ex-WA people looking to come over. So, yeah, I think we're going to run out of houses to rent, seriously. There's a real chance that'll happen in January, February. In our regional towns, it's not just a Perth thing. In our regional towns, Geraldton, Busselton, Dunsborough, people are having to live in caravan parks. It's that dire. So yeah, if you're an investor, tell you what, you're going to get some pretty significant rent increases. They will go above 5% gross yields. Certainly in the new year, house prices will eventually catch up, but you're going to see above 5% gross yields not too far away, and perhaps even get to 5.5%.
Yeah, I'm trying to make sense of the market right now, and it sounds quite unique. And looking through history, when you consider the long flat spell or negative spell that Perth has had, you can go back and look for clues. But I think it's going to perform very differently to how it has done beforehand. And you talk about market activity now in Perth, considering that you have to be a WA local to actually be participating in that market. So for those investors out there, they should get an uplift in rent moving forward. That's a big concern, and no doubt for the government and other sort of regulatory bodies about a shortage of housing. So I'd be worried about that at the moment. You're going to get people coming in. Why Perth? Why do you think people are going to flock back to Perth? Why do people want to live there? It's too far away from anywhere.
Yeah, I grew up in Melbourne, as I said, Phil, and when people left Melbourne to go somewhere for lifestyle, they went generally to Queensland. That was it. And maybe a career, you maybe went up to Sydney for a bit as well, but for lifestyle, people went to Queensland. Look, Perth is definitely a economic, job-driven migration story from the East Coast particularly. So you generally get people who will go over to the West if they've got job opportunities or economic opportunities. And certainly that's what we've got at the moment. The mining sector have got 10,000 jobs they need to fill by March 2021. The mining sector is going ballistic as happens. So it's always a roller coaster ride. And construction is the same. I've got a lot of friends who are builders, some of them very substantial size builders, and they are running out of trades already. So, the industry came down from 30,000 builds to 15. A lot of those trades left, went to other careers, went to the mines, went to over east. So you can't turn it around that quickly. So the labour demand will drive people here. It'll also be a bit of a lifestyle, I guess, reassessment. I think certainly I know we've been working with expats in Singapore and Hong Kong, Sydney and Melbourne, who are wanting to come back to Perth. I think they've sort of assessed it, when you're 25 to maybe 45, gung-ho, career-focused, the bigger cities and bright lights are appealing. But I think now people are reassessing things a bit more. And how long that will last for, we don't know. But certainly the hollowing out in the 25 to 40 age bracket, I think, will change. And look, WA apparently has 2.5 million people in WA, 2 million in Perth. I believe we've got about 280,000 people who are WA connected, who are either interstate or overseas. That's a lot of people. So not all of them will come back, but certainly I expect we will see through next year, particularly with the economic opportunities now back in the state and jobs. I think we'll see a lot of those expatriate West Australians start to come back.
So when you look at some of these dynamics and match that with what you spoke about beforehand, the demand for resources, can you call it? Is Perth about to move into a bit of a golden age of property and growth and economic development?
I think certainly a couple of that GST thing, I think in 20 years' time or even 10 years' time, people will realise how important that was for our state. So for the East Coast, other listeners who may not be aware, the GST gets divvied up across the country and they ping you if you get too much royalties from. So WA suffers and there's a complex formula. But we were down to 30 cents in the dollar. So even though our mining sector was going well, we're only getting 30 cents. Now we're getting 70. On top of that, all the iron ore royalties, iron ore prices, this morning I looked, it was 120 US a tonne. The government is rolling in $9 billion a year in iron ore royalties. It is unbelievable. So that's a lot of money for a state with 2.5 million people in it. So the government's going to have a lot of money to build and spend on infrastructure. And look, I certainly hope we return to growth. We are the cheapest in the country. Our median house price to income, we are the cheapest of any state. We're still the cheapest, even when rents spike, we're still going to be the cheapest place to rent. The thing that we've gone from, probably overvalued in 07, 9, 10, 11, 12, gone back to sort of fair value maybe last 3 or 4 years. But the last 2 years, we've really gone to undervalued. When the median price in Hobart and Adelaide, where their economies are a tiny portion of ours, where their average income is minuscule compared to what we are in Western Australia, when their median house price is more expensive than us, that tells me we're way under. I think we could get 20% growth. We'd then get up around the Brisbane or a bit over Brisbane prices. I think that's probably close to fair value. We shouldn't be at Sydney and Melbourne, anywhere near them. They're always the biggest two cities. The more population you have, obviously the higher the house prices are. But certainly I think we're undercooked. I hope we don't have that boom like we had last time, where in 2003 to 7, where we more than doubled, because I don't want another 13 years of misery to wait for it to go back to mean reversion. So I think 20% growth over the next 2 years is certainly possible. And with interest rates so low, people are going, gee, I can borrow $500,000 and it's costing me about $200 a week in interest. It's crazy.
And we spoke there about scar tissue and lessons from the last time this happened. So hopefully, and there's some smart people there that will help temper that growth at the right rate. To sort of move into the realm of geopolitics and Australia's part in the world, the Morrison government's taken a pretty tough stance against China. And when you think about China, Asia in particular, China being our largest export partner, a lot of that linked in with the stuff that you guys dig out of the ground in WA. What's the concern at a state-based level around that getting disrupted because of challenges in selling our resources up north from Australia? Is that a concern? Should investors be worried about that?
Oh, look, it is some element of concern. China's been musing, and you've probably heard in the press over the last few months, it doesn't always come through, but they're not going to buy this from Australia. But a lot of that stuff, like the barley, that was the big one. They said we're not going to buy barley, but the barley goes into a world market. They buy it from somewhere else, and our barley backfills to somewhere else where they bought it from that doesn't get that barley. So, look, the nickel, gold, all those things are a world commodity, so doesn't really matter where they buy that from. Iron ore is obviously the big one, but we are in a fortunate position that China would be buggered without our iron ore. So we do have the upper hand. Brazil's the only other world supplier of any significance. They've had all their COVID problems. I think the sentiment is that we certainly want to repair the relationship with China. We don't want to be bullied, but I think we need to have work out a better relationship with them. But the expectation they would turn off iron ore is negligible, less than 1%, because it would they got nowhere else to get it from. So could they turn it off for 2 weeks? Perhaps they could as a threat and say you're not coming in for two, but they couldn't turn it off for long because it would damage their own economy. So we look at WA is very much a resource-based and a China-based economy. Obviously, I think it's a lot of things that we need to do here to diversify, and certainly our markets, India, Vietnam and these other places are coming along. But at the moment, we are still very heavily China reliant. And if that economy took a tank or the geopolitical issues got too strong and they tried something like that, well, that could be a risk. But I think the iron ore one's pretty minor because they do need that product for their industry.
And that there is, great explanation of realpolitik at play, politics without ideology. And that means that they need it. So therefore they might be able to shake the can and push and prod when it comes to getting lobsters in up to Beijing or something or other, but they need that stuff to keep their economy going. So that should at least mean there's a rational relationship with Australia moving forward. Maybe we're getting outside our pay grade there. There's probably smarter people who can talk about that. But Damian, let's go another break. When we come back, I'm going to start picking your brain on where to buy, how to buy, who to buy with, and what to be paying for it. Back in a moment.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome back, everyone. Phil Tarrant, host of the Smart Property Investment Show with Damian Collins, Managing Director, Momentum Wealth, and the President of the Real Estate Institute in WA. Is buying in Perth for everyone right now, Damian? Yes or no?
No, certainly not for everybody. If you're going to invest in Perth, it's going to be a bit more volatile in the long run. And certainly that's something you've got to take into account. And for someone who's over east, it's pretty hard to buy doing it yourself. You really need to get someone who's a buyer's agent who knows what they're doing for you. So I certainly never say any properties for everyone at any time. It depends on their individual circumstances. But I certainly think the upside and with rent and growth and capital growth is certainly the upside opportunities are higher right now than the potential downside risk, and there's always risks.
And a lot of people, I think, Damian, and my original relationship with you is you were, a buyer's agent, a property strategist in a traditional sense, and you've evolved quite a lot since then. Tell me about Momentum Wealth today. What are you guys doing? Because you made a really important point there around making sure you're buying with someone that knows what they're doing in a particular market. And you guys have been around for a long time, but give me a sense for your business now.
Yeah, we've got two components to our business. We run Momentum Wealth, so we are a full-service property investment group. So, as you said, it's a strategy up front. So, first thing is you work with the client, assessing their finance capability, their risk profile, and how much risk they want to take. And then from there, you determine what's the right property and what's the right location. So we buy all around Australia, even though we're based here in Perth and we represent predominantly predominantly we represent Perth clients, or we represent East Coast clients who want to buy in Perth. And so we do buy all around Australia, and it's finding the right property. So if someone has already got 2 or 3 properties in Perth, even though we see the upside, we put them into Brisbane at the moment. That's where we're going. And even 50-50, one client we just bought 2 properties for, one in Perth, one in Brisbane. We're out of Melbourne and Sydney for the moment. I just think they've got a bit of oversupply issues. And then we've got a mortgage broker, the buyer's agency service, and then we've got a rent property management department as well. So it's a full service. So for people who are based in Perth or over east, they know that we can take care of all their property needs. But we've also got a funds management arm. We've got $500 million of assets under management in commercial properties. We buy, we just bought a couple of assets last few days for about 50 mil, and we're in the process of, we syndicate those. People invest 100 grand to upwards of $1 million, depending on the client, and they get commercial rental returns from those properties, and development projects as well. We've got about $180 million of development projects on the go. So quite different. I'd always say to people, residential property is a great place to start, but it's generally not where you want to end, because the rental yields, even when we get to 5.5% gross yield in Perth or 5%, when you pay your expenses, you're still down to about 3% net. Now, it's better than 1% in the bank. Totally get that. But it's one of those assets that, if you've got $2 million of net equity, net investment in residential, it's only $60K a year in income. Our philosophy is that you really want, as you age, you don't want to do it when you're 25 and probably not even when you're 35 or 40. But when you get to that older age bracket where income is more important than capital growth, start to blend it with a commercial property portfolio. Our ideal model portfolio is 50-50, 50% resi, 50% commercial. If you gear the commercial, you can get 7%. The resi gets you 3%, and that's a blended rate of 5%. So you're getting 100K a year on a $2 million portfolio, still getting capital growth, but it's a bit of a blended portfolio. And then for those who've got the high risk, we do the development stuff. That's high risk and high return. You can make a lot, you can make nothing, or you can lose money. So that's generally for higher net worth people who want to try and get 18% plus returns per annum.
And maybe we should have a chat specifically around commercial and those type of strategies at another point in time. But sticking with Perth resi stuff at the moment, so for investors, not owner-occupiers, where are the opportunities for buyers?
Look, there's a lot of great opportunities around at the moment. I'm still very big on making sure that you buy around where the infrastructure where somebody else has paid. So the roads, the rails, the beaches, obviously no one's paid for per se, but they're irreplaceable and worth a lot of money to people in terms of amenities. So certainly along the Northern Corridor, I love areas like Warwick, Duncraig. They're getting up there in price now. We're at 600,000 and 700,000. So, but you can go further up that Northern Corridor. They follow the train line. They follow the freeways. They're not far from the beaches. And I certainly think now, in a post-COVID environment, we've expanded our reach up in the Northern Corridor in terms of closer to the beach. So previously we were pretty much tapped out at about 25K north. But now looking at the post-COVID environment, people working from home more, we certainly think that you will find up to sort of that 25 to 45K hugging the coast. So you want to be right near the beach. That people will start to say, well, I'm only coming to work 2 days a week. So, yeah, it's a longer trip, but it's not as big a deal versus if you're coming in 5 days. So I think that's a really important thing to think about as well. If you want it, and one of the things in Perth is that the whole concept of being near train stations has still not caught on as much. It's getting there. But, growing up in Melbourne, I got the train to school every day. I got the train to uni every day. I got the train to work every day. It was just how I got around because it was a congested city. And in Perth, it's still very much a car city, but it's getting better with the trains. They're spending a lot of transport infrastructure. That's all free money to the government, from the government to build the value of your property. The Bayswater train station, there'll be 3 train lines going through there. You can buy a house in Bayswater for 650 to 750,000. It's 7 or 8 kilometres from the city. It's going to be the second most important train station in Perth. I mean, it's incredible the value that's there. So follow the train lines, follow the beach, particularly as you go north. That's what people want to be. And generally within that 5 to 10K radius of the city. Eastwick Park, where it's got some great cafe strips, that's an awesome spot as well. Highgate. There's a lot of really good value around at the moment. And as I say, the properties generally are positively geared from day one.
And I was going to ask you about sort of investment parameters and what to focus on. So is this a capital growth play for most people, or how does yield fit into the equation when you're buying in Perth sort of for the future?
Well, I think the yields are pretty good and will be positively geared in this amazing 2% interest rate you're paying in terms of your mortgages. But one of the other things you want to have a look at is we're going to see a return to the granny flat option. Now, that is like New South Wales, and I think some other states are picking up on that as well, where you can effectively put a granny flat in your backyard and rent it out to somebody else. Now, hasn't made sense in Perth for the last 4 or 5 years. We've run the numbers, and the cost of putting it in versus the additional rental return you were going to get versus the cost of debt, all those things, it just didn't make a lot of sense. Our rental market had dropped 100 a week. Our prices had dropped. So it just didn't make any sense. But we're coming back into that market where in the previous market in 2012-13, we could get people 6.5%, maybe 7% gross yields in some cases with a granny flat building on the back. So if you got that and you're netting out your 2% in, your 1.5% of costs and your 2% interest, you're still positively geared quite substantially. So I think it depends on their client's appetite for doing that. There's obviously a bit of risk. It's site works. You've got to get, that can always go a little bit astray, but certainly they're the things to be thinking about. And you can get, you can within 15, 20K of the city in Perth, get a 700, 800 metre block so easily for 500 or 600,000 where it's got a decent house on it, reno a bit and put the granny flat on the back. I think for the people with a lower budget, some of our clients are certainly and people from over east are buying up duplex, triplex, quadplex sites to knock down and build for rental return as well. So value adding, some capital value adding, but also because you're getting it at wholesale, building up the yields as well. So it'll be up to the individual's own circumstances, but there are definitely value add opportunities in the Perth market.
And sort of going down that last path you mentioned, sort of which is development, small scale development, anything to be particularly concerned about? Finding a builder is probably going to be tough until you get those tradies back, but where are the headaches? Where are the pitfalls?
Oh, look, development comes with a lot of headaches and pitfalls as you go through the project. You've always got to think about, generally in small-scale developments, you don't get as much grief. If you're building 2 villas, generally you won't get too much grief from neighbours, but certainly I know in our syndicated side where we're building between 12 and 15 up to 60, 80 apartment projects, we do get the NIMBYs, not in my backyard, so there's always that. You've got to get DA development approval, builder's risk, quality of the builder. It's very hard to do, even if you're in the state, if you don't know what you're doing. I mean, we do the development management. We manage a lot of clients' development projects, and it's certainly quite profitable for them. But it's one of those things, if you don't know what you're doing, you've got to understand the residential planning codes, the design guidelines. There's a lot to take into account. It's pretty I certainly know if I was developing over east, I'd get someone local to do it for me. And I'm an expert in most things property. It's just too hard without some local knowledge and expertise.
Fair enough. And let's talk about the reality for investors to operate in the Perth market. At the moment, you can't go there. As of a couple of weeks' time, you can do. That's a good thing. Whether or not you necessarily need to travel over there to buy. I know a lot of people you mentioned who are East Coast use you guys to secure property for them in Perth. What are the strategies? What are the tactics to do it quickly and effectively and find the right stock? Because I imagine good stuff doesn't sit around long on the market waiting to get sold. You could probably be pretty nimble, no doubt.
Oh, absolutely. And now, so Perth is not a very big auction market, so we don't, it's just culturally, we've never had a lot of auctions over in the West. So you still got 98% of properties sold by private treaty. You do an offer and acceptance, and you can make it subject to conditions. You can make it subject to finance, subject to a building inspection, subject to pest inspection, subject to whatever you want. It's all negotiable. So, but look, in this sort of market, we certainly in tune with the agents, and we know what's coming. We're even trying to get offers in now before the home opens where we can. Sometimes we don't get accepted. They want to run a home open, but even if you run to the home open, you've got to have your offer ready to go and as clean as possible. So get your finance sorted well in advance. And so you got your pre-approval. Certainly that's what we do. Our buyers agents go, well, this client's working with us. We're finance pre-approved for X. We don't tell them the amount, but we're finance pre-approved to get this property, and that gives agents confidence as well. So often we do get our offers accepted. We just had one actually today where we were 15 grand less, but they were that confident that our client had the money and was able to capability to follow through. They went for our offer over another person. So the less conditions you have, the better. Now, obviously, we write conditions to protect our buyer, but in some cases, if you've got 6 other offers, you've really got to trim it down and not make it overly complex. So it's definitely a seller's market. We've gone from that buyer's market. So if you're a buyer, you got to be quick, clean as possible, finance solid, and ready to settle in 30 to 60 days. It's not a market for where you can extract a lot of conditions. And
I remember last time, and this is probably going to lend itself to the work you're currently doing with REIWA, Damian. Last time I was in Perth, real estate agents, probably the most depressed bunch of people I've ever seen. Are they walking around now with their heads held high and their chest pumped out, driving Porsches down the main street there? Was it St. George's Terrace? Are they happy again?
Phil, they're up to a Kia. So previously they were having to walk around. They couldn't even afford a car, but now they've got a Kia. Look, yeah, I'm in my REIWA role. I've been going around to all the branch meetings in the last couple of weeks, and certainly a lot happier agents. You know, when transactions are up 60% over a year ago, week over week, and we're back to the best numbers since 2015. They're happy. Certainly property management agencies who, when your rent management fees, collection of percentage of the rent, knowing that our rents are going to spike 20%, and I'm one of them, we're happy because we know we're going to collect more money for our owners who will be happier. And it's been tough for the owners too, trying to, when they've got declining rents, declining values, and, you got to spend money on a hot water system or whatever it is. It's been a really challenging time. So everyone in Perth and West Australian real estate, whether they're property manager, selling agent, if you're a home seller, if you're a homeowner or an investor, your prices are going to move. You're going to be smiling a lot more than you have been the last 5 years. And we'll be very much looking forward to it. We tend to go in a very different cycle of the East Coast. I've noticed that over the last couple of decades since I've been here. We just tend to operate in our own little universe. And so while there's some challenges in some parts of the country, we expect, based on what we know today, that we've got a couple of good years ahead of us.
Oh, looks like it's Perth's time to shine. And holding costs, and I'll finish with this, Damian, because it fluctuates right across Australia. What do you expect to pay for a property management fee out your way? It's a bit more expensive, right?
Yeah, it is. Look, and the regulations are a lot tougher here. So a property manager in WA manages a lot less properties than they do over east. So look, your management fee tends to be 8.5-ish plus GST. So it's a bit, I think, over east. There's really cheap ones around, but I think industry standards probably closer to 6. Letting fees probably more around 2 weeks versus, I think, 1 week more or so over the east. But overall, the total cost of your portfolio, it's still relatively small. But I wish it was. People often say to me, Damien, you guys must be making a fortune in the West as property management companies. I'm not. In fact, I know East Coast agents are making better margins than I am. It's just the fact that 100 properties is about the top out here. And we're in Perth, if you're operating as a sole property manager, just because of the regulations and all the compliance that we have to do. So unfortunately, the government has made it a higher cost place to do business. But in the scheme of things, yeah, it's in terms of your overall total rental return, it's a pretty small part of the extra cost is a pretty small part.
That's cool. Damian, I feel a lot more informed and encouraged about considering Perth myself for maybe the next bit of diversification for the smart property investment portfolio. So maybe we'll have a chat offline around that. But I like what I'm hearing. Sounds like I should have bought there about a year ago. But anyway, let's not talk about that. But mate, thanks for sharing your insights. Keep up the great work across REIWA. No doubt you've been a voice of sensibility and leadership during this period of time, particularly running up to what sounds like is going to be a good time for Perth moving forward. But appreciate your time today, mate.
Good on you, Phil. Great to see you.
Nice one. Now, remember to check out smartpropertyinvestment.com.au. If you're not yet subscribing to our daily morning newsletter, so the first thing I was going on the property news interpretation about what's happening in Perth as well. Smartpropertyinvestment.com.au/subscribe. If you like this podcast, just press subscribe or tell a mate about it. I'm sure they'll be happy to tune in. If you like what we're doing, please keep those reviews coming. The team get a real kick out of reading them wherever you're listening to this right now. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
Are you in the real estate industry? We're on the lookout for Australia's best agents, networks and property managers to enter the REIWA Awards 2021 with principal partner list ready. The awards provide an invaluable opportunity to showcase your contribution to the industry, raise your profile on the national stage and celebrate your achievements with your peers. Nominations close in November. Start your nomination now at realestatebusinessawards.com.au/REIB-awards.